Good morning, everyone. Sorry, I was a few seconds late there. I've not getting used to Jeff not being here. So no Jeff today, but lots to do. I'm just going to quickly sign into both Zooms. There we go. Right, so if I do that, you guys hear me okay? I don't know why I've got. Good morning, John. Good morning, Paul. I have got a strange screen up with Marlon's name. I don't know why that is. Not sure what's going on there, but don't worry. You can see, okay, grand. All right. Right then, okay, let's have a look at where we are at today. Get rid of that. Oops. That's all good. So we'll check the FTSE out in a little while, but I think we'll just have a look at some other charts for a bit. I think what I'd like to do, because we don't have Jeff, and I know many of you trade currencies, I'm sort of just a bit aware that I have been showing you trades in the FTSE, and it might not really mean anything to you guys because you don't really trade the FTSE. So what I might do instead is maybe go through some wave riders without giving the specifics. You know, we can have a look through some wave riders and see whether they're shaping up. I think really interesting and fascinating market right now because of the fundamentals. You know, what's some of the drivers in the market are really interesting, and I think we can probably make some decisions along with the kind of sentiment. And see what the actual strategy indicates. Now, I don't know whether that's something you guys want to do, but let's if it's nothing of interest, then just let me know and we'll move on. We got the quiz today. John is in, so we got a good quiz today. Not Jeff and I trying to bumble through it. And Jeff is not with us because he is, I think, going to a kid's party that he didn't really want to go to. So. So let's have a look at some of the indicators of the day. So from what I've got, now let me know if you guys are the same. I've got CAD Yen as a long. I have got pound Swissy as a short, and I've got the pound yen as a long. So let's just have a quick chat about some of these and what might well drive this. And if you guys are looking at anything else. Oh, cool, mate. Oh, yeah, that sounds good, John. Yeah.
No, it's my first day back. I've not looked at any charts, nothing. I've done nothing. I've just sat down in front of where I am now. So I've not done a quiz for today, so you can shoot me. I'm so sorry.
Oh, no, that's okay, mate. That's all right. Well, that's okay. Well, maybe you can be my co-host for the day.
I don't mind. Yeah, I haven't even got my screen up. My background.
That's okay.
Yeah,
that's all right.
Yeah, but yeah.
Let's make it a show where we're just going to look through some of the charts and some of the potential drivers. Actually, you know what? One thing I haven't yet done is I've got to make sure that I've got my FTSE 100 information at the ready. Now, overnight we had really two things have been going on. I'm guessing you guys are aware of statements out of the central bank in the States. But we had Brainard effectively saying that there would be further tightening, you know, more tightening than was expected. That pushed the S&P lower, pushed the NASDAQ lower, pushed yields higher. And we've had the FOMC minutes yesterday. So there's a lot of concern right now, certainly for the US equities. The FTSE 100 has been resilient, to say the least, and we can have a look at that. And I'm just going to have a look to see what it's suggesting today. It still suggests lower. We've seen oil as well just come off a little bit. Now, the biggest company on the FTSE 100 is still currently Shell. and Shell have been hit by a 4 billion bill because of their investments in Russia. So that might be enough to drive the FTSE lower today. I'm just seeing just a little bit of weakness coming in. Actually, yeah, let's have a look. And I mean, these are I'm still short. I've got a stack full of shorts on the FTSE 100. I've got one more sort that I might take up at 76. They're around about the 76 area. If it gets there, little bit of a gap down this morning so far. Now, let me just see if I can do this. You can see here, that was the, this was the close yesterday, and we gapped down this morning to here. So a little gap down. Then we started to look as if we were getting through some of the trend lines. There is I wanted to talk to Jeff about the potential trade line. But if you look along here, you can start to carve something out. Let's get rid of this one. Get rid of that, put that over there, and we'll bring this one up here now. So round about there. Now you can see that there's just a little bit of support here and a little bit of resistance here. When we first opened up, we were below that level. So this is quite key. What I am seeing is just weakness, weakness, weakness. When we look at these bars up here, bit of a tail on that one. This one just didn't know what was going on. Big bearish move on that one. Yes, that one was a bit of a hold on that one, and it did end up at the highs. But since then, we've seen lots and lots of wicks, which is just suggesting weakness. So if we're sort of like having a look at the information, oh, brilliant, thanks, Paul. All right, we'll have a look at those. Brilliant stuff. All right, we're going to look through some of Paul P's suggestions. So we've seen just some indication of weakness up here. So I'm quite comfortable sticking with the downside. I'm quite comfortable sticking with the shorts. I've got a target here which would give me a little bit of profit on all these trades. This is the only one that is a bit problematic, but there's a stack above that level, so that would be good for me. But where I might aim for 7,600 before I get into the next position is because of this little trend line along here. And it might even go back a bit. No, that's the one there. That's the one there. So when we come in just here, you can see that trend line is 76.15. So I'd go in at 76 probably because it's the round number and it might not get to the trend line. But you know, if it goes to 76.16, no problem at all. So I'm waiting on it now. Now I don't need to get in again. I just need to be waiting for either a drift to the downside or the pop to the upside. Now, Paul's bringing in the Aussie Yen, which I think is interesting because the Aussie Yen is thought to be a bit of a proxy for the stock market. Now, it is and it isn't. Of course, sometimes it will be, sometimes it won't. So, but we are seeing just a little bit. Yesterday, we saw that downdrift yesterday. Double tops. I mean, this is really Jeff's area, but you're absolutely right. Unable to get through this point here. Now, I've got a bit of a problem with the Aussie because I know that the numbers from the Australian economy are good. You know, they're solid numbers. But at some point, you wonder about valuation. And the move has been so aggressive to the upside. This move has been so strong to the upside that some retracement would be, you know, potentially in order. I guess the question is, what's going to drive it lower? What we've heard from Australia is that they are leaving interest rates on hold, but there was just a little bit of a change in the language about what might happen next. They will probably be most likely forced into changing rather than either having the necessity or the desire to change interest rate, the interest rate policy. But that's still, you know, what, 2 months away, probably 2 months away. So if we're looking at probably June, I think that there could be some choppy price action in between times. Now, on this daily chart, it looks like the level's down here. But let's have a look on the weekly and see if, yeah, I mean, the weekly is the same. 86 is currently untested. This would be interesting if we start to see this move to the downside and we see a bar that, you know, still green, but if we see a bar that starts to do this, you know, something at the lows down there, but still looks like a bit of a sell-off. So if that bar ends up, the current bar, so by tomorrow, looks like this, it would suggest that we would come down. Monthly pivot looks like the first spot, and because this area is so much lower down here, I think the monthly pivot would look like a pretty attractive point to try and take some profit. It's just a bit of a difficult one because of the difference between the yen and the Aussie. You know, the yen is hyper weak and the Aussie is pretty strong. And so yesterday you traded some yen short crosses and some pound dollar. I thought the market sentiment was bearish on the yen and the pound. Turned out not. Well, this is interesting. Yeah. So the overall sentiment now. So and you have to take into account when you're trading this stuff that at some point fair value gets hit. So let's say that I'll bring this in here. Is it whiteboard? Yeah. All right, we'll bring that there. And let me see if my pen is on the right page. Yeah, pen is on the right page. That's good. Oh, you know what? That's not going to let me do that, but that's okay. That's all right. We'll do it a different way. Let's say you have got milk. Okay, let's say you've got the price of milk, and the price of milk is $1. And to produce the milk that we see in the shops, there's 50 cows. 50 cows produce the milk. Now, all of a sudden, there's something, I don't know, something happens to the cows, and there ends up being 40 cows. Now, at this point, either these cows have to work harder, or the more likelihood is they produce less milk. Now, if they produce less milk, the price of milk is going to go higher because the same amount of people want the milk, but there's less of it. So the price of milk goes higher and it goes to $2. Now, if this situation stays the same, even though it is more bearish, at some point, the fair value of the amount of cows producing the amount of milk will level off. It will find its value, and that will remain sort of like in that kind of area. And it needs a new driver to take us into a new shift. So then you'd have to get a drop of another 10 cows really to drive it to another $1, let's say, another $1 higher. So if we bring that back to the conversation about the Aussie and the yen, or in fact the conversation about the yen, yes, the yen is bearish. So overall, the yen is bearish. But when that news is released, when that information is known, the price gets driven to the fair value point of the news that is in public consciousness. And until something else kind of like compounds that, then it's going to go. It's going to go again. It's going to go. You know, it's going to remain probably where it is. So even though the yen is, has got this kind of this cloud of interest rates being where they are and potentially not getting risen because they're still trying to kind of grapple with the economy. There can be just a little bit of a change in the rhetoric from the BOJ, and that can start making it quite positive, because what's happening up here with the Aussie yen is something similar. The Aussie yen's had a pretty parabolic move to the upside, and now we're starting to see a general leveling off at this particular point, and this becomes dangerous because sentiment only needs to flip a little bit before we get something of quite a significant move, because at some point the buying pressure starts to dry up. Because many people would have got in here, 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 and there's some more here. But eventually, some of these people are going to start thinking, you know what? We've leveled off now. there's probably nothing new coming from the Bank of Japan, maybe nothing new coming from the RBA. In actual fact, we did get something new from the RBA the other day, and there was just a little shift in the rhetoric. And still, the Aussie hasn't rallied off the back of that. That's a bit of a warning sign. So, so that would suggest to me that the most likely course from here is lower. I mean, I always think that when we get these parabolic moves, and I feel the same about the FTSE. You know, the FTSE may well continue to go higher and higher and higher, but ultimately, these moves are unsustainable. You know, you don't know when they will eventually sort of like roll over, but eventually they're going to roll over. Now, there's probably enough out there sort of when it comes down to what the Fed are doing, what's going on with the conflict in Russia, the problem with Brexit in the UK, the problem with the pandemic still raging through China. So you've got these global movements which are suggesting that actually we're getting some contraction. So global economies are starting to get to feel the squeeze, and we've got lots of stuff which will only compound that. So at some point, this stuff's going to roll over. Now the yen is in a way, it becomes a bit of a hedge for risk. That will likely change soon because their trade balances are terrible at the minute, comparatively speaking to historical data. But people are still sort of like using the yen that way. And the yen is so beaten up. It's the most beaten up kid, really, you know, in the playground. At some point, that particular kid and that currency will start to just lift its body up a little bit, and it will probably send the yen just in a bit of a rally, but it probably won't be sustainable, you know. So if you are looking to go short yen, then going short yen, you know, i.e. longer the other currencies, doesn't appear the best place when it's up here. You know, I wouldn't want to go long Aussie at this stage, because I mean we're getting pretty. I mean, there's a direct sort of like horizontal level here. So Paul P's so look at that. I mean, it got tested in so many areas here. It's a little bit messy, I grant you, but you can get a few kind of like relatively clear signals here that the yen is at the Aussie yen's at a horizontal level, and this is a potential point that it could reverse a little bit. Potential. If it's not there, then it's probably going to be the next level up, which might well be there. But eventually, this thing will roll over. But ultimately, going long Aussie on a resistance area doesn't seem too sensible at this stage. Now, if we have a look at some other yen things, what else is going on here? Well, no, I can't get that bigger than I want it. This is the CAD yen. Not a whole bunch of data here, but you can see there's a little horizontal level here and here, and again a parabolic move. Not an area that I'd really want to sort of take on long CAD and short the yen at this point. Not that I want to go long yen. I guess what I'm saying is this becomes more dangerous. To go long yen here becomes a lot more dangerous because we've already had a huge move, which means that people have already made quite good money. Will they leave that on the table, or will they start taking some profit? You know, they might not be saying I'm selling the CAD. They might just, you know, by default, they have to sell the CAD when they take their profit. That they're not necessarily buying yen here; they're just taking profit. So, so that would take me away from wanting to trade CAD yen as a long. Swiss yen, same. Look, you know, the yen's just been so beaten up. Same with the euro, and you can see here with the euro. And I'm looking at monthly charts here. So this is the most significant time frame. Monthly charts also suggesting that we could well be at a level of a horizontal level here. You can see that there's a point just along there. There's to the downside. There's to the downside. You know, the sensible assumption here, technically speaking, would be some downside here from the euro yen. So I don't know how many more you want me to cover, but you know, the pound might have a little bit further to go, but ultimately, you know, and it's not quite as parabolic. So maybe it will depend on what you pick it against. Yeah, well, it could be, John. Yes, it could. There's stuff going on inside Japan right now, which is definitely putting the Bank of Japan in some concern. There will be a point where even the yen's weakness, John's point is that it'll make it good for Japanese export market, but even the yen's weakness will be too dangerous for their economy. So at some point they are likely to intervene, and that's really what's been happening over the last week. And you may not be aware of what's been going on, but over the last week, the Bank of Japan have been coming out and sort of suggesting that, you know what, this is getting a bit uneasy up here, or down here, if you like, that the yen's valuations are getting a little bit uneasy. And there might be some tools that we'll need to implement to stabilize price a little bit. So that's probably why you might be looking at the yen, but specifically, you are in a very dangerous position trying to go short on the yen when it's already seen a decent move. Yeah, you're absolutely right, John. I mean, it's you know what, I think the two economies that are in fact, let's say three, in big trouble right now in some respects. Maybe big trouble is the wrong word. In complicated situations, Japan's economy is very complicated because of the lack of growth that they've really needed to enjoy. Where everybody else has seen this big inflation boost, they're in a bit of trouble. So ultimately, I suppose the point, Anne, is that yes, you want to go short the yen, but you've got to consider the price. And when you see big moves against it, it's probably not the right time. You're a bit late to the party. So I guess wait for the next party is maybe the idea, because the structure of the Japanese economy is still in a terrible position, really. The same with the UK. You know, the UK is in trouble because the UK, Brexit was 2016, so we're looking at 6 years ago since Brexit. That's not very long for the UK's economy to have to turn the tankard and figure out how they're going to fill some of the job vacancies that need filling. Farming is suffering massively. The amount of crops and livestock that they've effectively had to burn because they haven't got the people there working there anymore because of the European Union workers coming over to the country. So farmers aren't able to employ people. So crops are just going to waste, really. And that's just one sector. You know, the health sector. There's so many areas that relied on the EU for employment. And that's just been taken straight away. So you've got a supply constraint over in the UK from Brexit. Then you had COVID, which I know everybody sort of like went through, but we weren't really in a position to have to be able to handle COVID after Brexit was so fresh. Then you've got this conflict. So literally, sort of, you've got a hat trick of things going on right now in the UK that other countries probably don't have the same problem to have to deal with. Australia is an example. Nowhere near as problematic. You know, they haven't had Brexit. They're not suffering from the same inflation woes that the UK are. So, you know, it's a difficult time. Then you've got things going on in the States. You know, things going on in the States is you've got an overinflated stock market. You've got inflation, which is raging, and you've got a Fed, which is on the move. You know, that they will need to do something, but they know that they are going to choke the economy. So there is going to be some pain. We don't know when it's going to happen. And this is, again, sort of, you know, the thing, Anne, is that what we need to be doing is trying to get in front of what's going to happen and not behind it. When the news is sort of digested and everybody sort of made their decisions, the easier money is not there anymore. So the easier money is going to come from selling the S&P, selling the NASDAQ, potentially selling the FTSE. The FTSE is a difficult one because of its mining and energy connection. You know, that they've sort of enjoyed a little bit. It's enjoyed a little bit more than some of the others. Germany, the DAX is going to suffer. You know, because of its exposure to imports from Russian energy. So the DAX is likely to suffer. So you've got all these sort of these indices that you know, when you look at the S&P, the S&P is you know, again, one of those moves, very, very parabolic. You know, it kind of had a real big takeoff to the upside, and now it's at a level of resistance. It's already proved itself that this area is a resistance zone. It's tried to get back up there, and now it's refusing it. So what we should be doing is looking for signs and signals that the S&P is in a downtrend. Because the data is suggesting that that's what's going to happen. The data and the news and the rhetoric suggests that's what's going to happen. This is very different from what we've just seen with the yen. So if we think about the S&P and what we've got here, we've got this head and shoulders pattern. We've got a left shoulder there, we got the head there, and we got the right shoulder. Now, it doesn't really matter that we've got a head and shoulders pattern, because we can put this into just, you know, common trading parlance, where we're seeing a high here, a higher high here. Now we've got this potential lower high, and the fact that the potential lower high is at the same as this area over here tells us that we've got this this head and shoulders pattern. And this tends to be negative for the stock market. Now, sorry, for any market. So this is the neckline is going to be somewhere in this area here, you know. So what we'd anticipate is this to come down and fall to this point. Now, if it falls through, we look for a retest and breaking again. So we're trying to look at these horizontal lines and sort of surmising where it might change. Well, we've got one here, and we've got a stack of information which is saying, look out, stock market. Now, timing this stuff is always tricky, and actually seasonally, April is pretty good for the stock market. So it might not be that we're going to just collapse over the next week or so. It might be that we still mess around in this area for a little while before we collapse. But getting, you know, and even if it's not here, those all-time highs up here would be another area that I'd be looking for a short. You know, because the likelihood that the S&P can continue to rally to all-time highs, you know, completely unabated, has just diminished. You know, the likelihood is diminished. So this is the sort of thing that I'd want to look for. Yes, we want to sort of like find other information, for example, with the Aussie Yen, but the Aussie Yen would be something similar. I'd want to see also something which would suggest a turnaround. As Paul says, we do have this double top, but we've also got a continuation of the trend. You know, we've still got higher lows here. There's nothing suggesting that this is coming down. So yet. So, well, apart from the double top, but that's just saying that there's a pause. What I'd want to see is this become like a left shoulder, this become like a head, and some lower high in this area would then say, okay, maybe now we can get into looking for downside with the Aussie Yen. At this stage, it's relatively unclear. You know, down here, popping up again, giving us that head and shoulders pattern would be clean. You know, now I look for head and shoulders patterns, but it's not the only one which would suggest a reversal. There are others that we could look for. But right now, this is still in an uptrend. So even though I wouldn't want to go long here, the short is not yet on offer. I guess that's the point with that. Now you shorted the pound dollar as well. So, yeah, the pound dollar. Now the pound dollar is another interesting one, because you're right, Anne. The pound dollar is a short. If you look at the fundamentals, the Fed on the move, bond yields stretching higher again. And the Fed are talking about reducing the balance sheet now. They're not just talking about raising interest rates, which is one action they can take. It's reducing the balance sheet. And just so you understand what the balance sheet is, they buy bonds from the US government. So the US government sells the Fed, the central bank, bonds, and they agree to pay them back a specific interest rate. And when they buy their bonds from the government, it gives the government money. So it means that the government can go out and spend on infrastructure and all sorts of other things, which is expansionary, you know, which is why we've seen this stock market rally. Now, what the Fed are talking about doing now is reducing the balance sheet. So they're going to sell the bonds back into the marketplace. You know, that so somebody's going to go and buy these bonds again. Probably the government will buy a few. So we've now got a central bank which is not only raising interest rates, which is dangerous, because it means that you know, government now buying bonds, they're going to pay a higher interest rate, which pushes up the price of everything. They're also going to sell the bonds back into the market, so they're going to reduce the balance sheet at a rate of 1 trillion each year. That's what's been suggested, which they have to do. This day was coming. Now, this is incredibly difficult, dangerous situation for the market, and recession is high. Recession concerns are high, and recession probabilities are high. So we are likely to get this. Now, this will probably push down the price of the Aussie with it, because the Aussie is a commodity-based economy, and they sell a lot into the broad market. And when there is contraction globally, then the Australian economy won't be able to sell so much into the market, because people won't be buying so much iron ore for building and everything else. So this will be negative for the Australian economy. And what's also negative for the Australian economy is the lockdown which is happening in China. How long does that last? Nobody knows, but it is dangerous and it is negative, and that's bad for everything, global economy, the lot. So so the Aussie does have its potential concerning situations and scenarios out there, but it is right across the board right now. So we're just waiting on that. Now the pound. Sorry, I was talking about the pound dollar. So that's it for the dollar. The dollar is likely to push higher. Before we get the recession, the dollar is likely to push higher. The Bank of England. I said about the hat trick of problems they've got with Brexit, COVID, and the conflict, and none of them are finished. You know, that all of them have just basically run on into the next thing. It's not like the dust settled, next crisis is hitting. They literally just stacked on top of each other. So eventually things are going to topple. Now their situation, and they've got inflation raging. So the inflation raging means that the central bank should be doing something similar to the Fed, but they can't do that because, as I said about the problem with Brexit, it's put huge pressure on the jobs market and the labour market. So if they start to raise interest rates too fast and start releasing things back into, releasing the bonds back into the market, then what it does is it starts to choke consumers. And even though it will choke the consumers in the States, they're at a slightly better position to be able to absorb it. In the UK, they're not in a good position to absorb it. So the Bank of England are there going, I don't know what to do. Do we sort of like start to react and raise interest rates and do all this stuff, choking the consumer, killing the economy? Or do we leave things alone and allow inflation to eat into the economy and become embedded? These higher prices becoming embedded into the economy, which will also ultimately choke consumers. They literally are caught between a rock and a hard place. And for that reason, the pound, for my mind, is pretty untradeable. Because yes, there are, pound dollar, yes, definitely positive. I would completely agree with that. But because you don't know what the Bank of England's move is going to be, it becomes difficult to trade it. It's just not very clear, what's going to happen. But if we look at the pound dollar, any move to the upside is a selling opportunity. But again, this move has, how long does a move have to be before it becomes too long? Before it becomes, before you get a bounce back. Now, the rule of thumb the number that most traders love is the number 3. They like 3 touches, they like 3 bounces, they like the ABC, So when you see sort of like three moves to the downside, 3 attempts to the downside, it would suggest that there is probably some basing out. So you've kind of got this high here, a move down. So there's 1, back, there's 2, back, and this is the 3rd now. So it would suggest that we would see some upside. Now, I don't know whether this is it. it might be a little bit higher. Ultimately, though, you are right. The pound dollar should be a short. So your analysis on the pair is correct, but sometimes the timing can just be a little bit skewed. So just because you were wrong about the trade, you are near support here, and as I say, you've already had 3 moves to the downside. So this support is going to be a tough ask to get through that support line, particularly when we don't know what the move of the UK is going to be. We don't know what the Bank of England is going to do, so it makes that support line even more tricky. And I don't know how far back it goes. Let's have a look. Let's see where we are. Yeah, it does look like there's another push lower. Another one push lower, but if you're thinking of the best possible price to get in on the pound, it would probably be more likely here. That would be another really interesting point to start to look for shorts. But this area is a little bit woolly. It's kind of no man's land. This could push up here and then go down there, or it could push down there then go up there. So it's kind of like it's not really anywhere. These areas are what we're really looking for. Nice, clean sort of indication that there has been resistance at these points before. Because if we know that we are trading at a resistance point, and I'm on a weekly chart here, so I'm on a monthly chart here. If we know we're trading at resistance points, at least we know we've got other traders that will help us by pushing the market with us. Then we can start looking on our dailies for some signals. But you might well be getting in just at the worst possible price. Not that you're wrong about the move, about the fact that it's bearish. Yes, it is bearish. No two ways about it. But I just think that the timing might just be off. And plus the fact the pound actually does pretty well in April as well. Certainly the first 2 weeks, the pound is usually pretty good, and that's a lot down to the tax receipts that they're starting to get in. So there's lots really kind of to digest, and this is one of the reasons I don't worry about trying to time the market with stop losses. Now, I'm not saying there's anything wrong with that, because I think that if you stack it up, if that's the way you trade, then you should continue to go with that. But I don't like, and certainly if you've got an ATW account, you've got to trade with the stop losses. You've got to make sure your risk is 1%. But the one I'm running is a different account. So I'm the reason I don't trade with the stop losses, but I take tiny increments when I take the trade, is because I'm effectively saying I don't know the timing. I just feel like the sentiment is this. I can't say I know the sentiment, but I think the sentiment is this. So I'll wait. I'll get in and I'll just wait, and eventually, so far more often than not, I'm correct about the direction. So this is the reason that I don't try and time it. To say that this is the bar it's going to change on. And it's not to say that what you're doing isn't right, because the signal that you're using over time has been tested to be right, but it just doesn't suit me to do that. So I try and take a bit of a broader overview of it. Anything to add, John?
I'm just listening because I've had my I'm like you. Even though I live in Malaysia, I work April to April. That's my accounts run April to April. We have a house in the UK that we have to do our tax returns on and things like that. So I took my two and a half weeks out. Yeah, I agree with what's going on. I'm not in any currency trading at the minute. This is my first day back. I'm watching it all. Things look overextended to me, so I'm just watching. I looked at that Aussie Yen. I looked at it. I went, I'll keep that out of the way. The yen can be, for me, the yen can be good, but sometimes, like you've said, it can just go like that. And once it does, you can get caught on the wrong side of and get a bit of pain. So I tend to steer clear of it at the minute. I made my money shorting the Nasdaq and the S&P. I lost a little bit at the bottom as it bounced back up, so I just backed out, locked in my profits, did my tax returns, and now I'm waiting to go back in again for the market, to short it, because I just don't see. I'm glad I don't have to make that interest decision.
Oh,
So,
mate, it's yeah. I mean, it really is a minefield. It's very difficult. I mean, I was gonna let me just have a quick look at some wave riders as well, because we were going to sort of like check that out. Now, this is the CAD. So the CAD yen is giving us a signal today. I don't know whether you're seeing this as well, John, because I'm not sure whether you're still looking at wave riders, but the CAD yen is giving us a signal long. This to me would be a dangerous position to take that long on board. You know, I think you might be just too late to the party, and this is where I would say, how can I use the strategy but pick the best possible pair for the strategy? That wouldn't interest me. You know, it's just I feel a bit cheated trying to get in here. I do feel a bit too late to the party to get in. The pound versus the Swissy is a short and another difficult one because it is at support here. You know, so this to me would be a signal that I wouldn't want to take. Support there, you can see support there, resistance there. This could be a support line. So that would suggest that if I was going to take this on and try and get a signal short, it would have to be within this area, not at the low end of it. So not interested in that. And the final one is the pound yen for a long. And that's quite interesting because yeah, I mean, there might be some room there. I'd want it back here, really, if I was going to take that on long. So I haven't really got a lot there. Now, I don't know, Anne, whether you were trading a wave rider yesterday or not. Aussie Yen is another long, but it's getting a bit long in the tooth. That was a few days ago. Let's see if we can find something which would make more sense.
I looked at wave rider this morning, but I didn't. For me, I didn't see anything that I needed to take that was going to be good.
You didn't see.
No, I didn't see anything that was good. Combined with the fact it's Thursday, and it looked like, because I've not been in the market, to me it looked like a few days ago everything did its move, and it's gone and it's done its thing. And I thought, do I want to get in at the top of something or the bottom of something? I think no, just chill, check out some things, do a bit of research, and wait for next week. I've been caught out like that before. So after 2 years of not blowing my accounts up and things like that, I thought, right, no, be a sensible boy and wait.
I think you're right, mate. I mean, and this is the thing, isn't it? Is that the waiting is waiting for the right trade is part of it. You know, that's part of being a good trader is not trading everything, not trading every signal that we see. So, and you traded the Kiwi Yen, the pound yen, CAD yen. Yeah, fantastic. Yeah. So so hopefully that's starting to make a bit of sense. You know, I'm going to try and show you one that that is right, and that way it will hopefully make it a bit clearer for you. Now, this one, let me just have a look at this pound yen on. Now this one's more interesting. You see this bar here. Now that was on the 31st. That one would start to qualify. You know, that one would qualify somewhat. And the reason that one qualifies is because there's a genuine retracement to at least this area here. So we're kind of back to where we started. In a way, I suppose you could say. Yeah, you see the same sort of thing with the Aussie. This would have been okay with the Aussie because it's come right back to it. I don't know. There are two places that you will be allowed, if you like, that qualifies for you to go long. Now, when you're looking at price structure, price goes like this. Let's say you got a really nice trend and it's doing this. Now, there are two places that you're allowed to say that there's a long, and one is a test of this breakout point, and one is a test of the start of the current, the preceding move. So if price comes down to this point and there's a signal, great. If price comes down to this point and there's a signal, still great. Now you might not be aiming for all-time highs there, but that is a green light to go. That's similar to this point here. You know, this is really sort of like where the lowest point of where it took off from. So that's similar. I don't love it because I'm much more interested in the close prices, but it does illustrate it better when you look at the pound. Where is that? What was it? What we were looking at? The pound yen, wasn't it? The pound yen is good because when you look at this with a pound yen, this is the start of where it took off. Then we got this resistance. Now, the 2 points are here. A retest there and a signal would have been fine. Or here, because that was that's where the prevailing trend, that's the preceding trend started from. So these are still relevant areas to try and take the long. Now, I guess what you've got with some of the trades yesterday, Kiwi Yen was one of them. Let's have a look at that. Yesterday, you mean this, I'm guessing. The problem with this is that this is the sort of start of the trend area. So you're allowed to take, you know, if it comes back here and you see a signal, no problem at all. But really, the area for, well, I mean, this is so scruffy. This really is the breakout bar. So until it retraces to somewhere around there and gives you a signal, then you haven't really got anything. But to trade the breakout, that's what you're doing there. In actual fact, you probably weren't triggered into that one, were you, Anne? The breakout there is no good. You are trading a breakout bar rather than a retest bar, and really you want it to come down and retest it again. So what was the other one? Pound yen. Let's have a look from yesterday. Yeah, see now with a pound yen, you're trading nearer the topper end. You know, you're trading in the middle of the move. You're always trying to get the bottom of the move. The bottom of you know, when it comes back again, you're trying to get the bottom end, not the middle. And if you're trading anything from yesterday, okay, I get why you trade that. It's bounced off the area, off one of the areas, but that's not really the messaging. That the areas only come into play after you've established that you have tested price. After you've come back and tested a price point, whether it be a base of the trend, or whether it be the breakout point is come back to the breakout point. They're the points that you're looking for, and they're the points you're looking for to have confluence with the indicators. If you don't have that, in my opinion, you don't have a trade, because there's no cyclicity, and that's really the keys to it. The keys to everything is cyclicity. Price is king or queen, if you like. The price is majestic. You know, it's price is the thing that we should always look for first. Then we want our area to bounce off to be superimposed on top of where the price point is. So that's in the middle. So that's no good. And if this doesn't make sense, let me know, and I'll go through it in even more detail. And the CAD yen is here. Now, see even down here, the CAD yen for me is no good, because I don't have. Now, what we'll do is we'll have a look at the CAD yen on a different time frame to see if it gives us a clearer indication. But on the daily, it's no good. Now, and then it's still no good. Even a bar here. Let's say you get a message by the end of today that this is a bar. For me, this is still no good, because which part of price has this retraced to and tested? Hasn't tested here, and I don't know, and it needs to break out of this point and come back to give me a message. Yeah. That's good, Anne. Yeah, nicely put. And that's the indicate. That's the development, isn't it? To say that was a mistake, and if you can recognize a mistake, then you've made a step in the right direction, which is brilliant. We learn much more from mistakes than we do from victories, if you like. So that's great that you've noticed that. But can you see why this would not be, in my opinion, a safe place to take a trade? It's not to say that it won't go higher, not to say that it isn't a bounce point and it won't go up, but it's not there's no price here to bounce away from, so it's no good to us. You know, that really is nowhere. So let's have a look at this here, down here, and see if there on the 4 hour we saw a point where we were retracing to, and see if there's a different signal that we can take. Right, now this is good. This has worked out well. So this here was our previous top. Now all I'm interested in is getting a line to go up to the top and come back. And when it breaks down, when it breaks out, I want it to come and test here or here, because that's where the trend started and that's where it had to break out from. I don't get a test, no trade, no good for me. This is the next point here. Does it come and test there? No, it doesn't. Yeah, okay, we get the bounce. So these are all sort of trade signals, but I would not be interested in any of these. Okay, here. So I've got that point there. Now this is the first one. This bar here would have been the first one that I would have been interested in, because price has come up, it's come back, and it's tested. Now it's tested, I'm interested. This is our next point here. Maybe it's not quite on it, but it's good enough, possibly. Now there or there. So this is the box. Now it comes down here. This would have been a signal for me, and that would have been a loser. But look what happens here. It comes down under the box, it comes back again, and then it gives us this. So now you've got a trade to the upside. And now this is a test of this, but the problem is now you've potentially got a lower high here, possibly. So it's not as clean. You know, you could take something here and actually look at it retracing. So the area is right, price is correct here, but this bar here is sort of like suggesting that price is going to hold. You've got the weekly pivot, you've got to break out of the previous trend here, and it's come back. This is a little bit problematic, and so is the daily pivot. So it might work. So what, you know, the trade here is to trade it up to the daily pivot and close your position, or take your profit and move your stops to break even, because you don't know whether it's going to come back again here. This one, totally different. You know, this one, it doesn't have that a lower high. This is still a higher low. So that one's got some room and legs to go. Much cleaner. Does that make sense, Anne, or anybody else got any questions about that? Does that make sense to you, John? I mean, I know you've been trading a while, so it probably
for me, it's always good, because I've got my plan. That my plan is this month is just to if there's something good, I'll take it. If I don't think there's anything good, if I know that, I won't take it. I've learned that, and when things are that far gone, and it's got that little, everybody's got their own terms, but to me it looks like a helter-skelter at the top there. It just looks too much. Yeah. You know, I thought, okay, I don't need to take that trade. I mean, that's the thing I'm learning now. I don't need to take that one. Yeah. You know, am I in a trade at the minute? Yes. Bang. I'm about to make sure I get my ducks in a row to take the opportunity at the FTSE, like you. It's at the top. I'm giving it right. Okay, I will allow myself a small position on there that I don't have to worry about, and I can go to
yes. Yeah.
That's how I feel with the Wave Rider. I will look again tomorrow, but I won't take anything because it's Friday, and I'll do some research at the weekend. So I don't fall into trades that are stupid for me. Does that make sense? Like I can't base it on anybody else. I've been doing it 2 years, so I have my own account. It's small, but it's up. I have my ATW account. It's up a little bit, but overall, I needed to be 2 years in, and I've not blown anything up, and I've been learning. So my trading from that point of view is good.
That's brilliant, mate. And do you know what? I was thinking about this yesterday. If you've been trading for, let's say, 6 months to a year, and all of a sudden, rather than whichever other way you make money, let's say through a job or whatever,
yep.
Rather than paying for a haircut every 6 weeks from your job, you are now paying for it from your trading. That's progress. And that, within 6 months. Then the next thing is, can you pay for something bigger, clothing? Can you go shopping now, right? Rather than sort of paying for it for your wages, can you pay for it through trading? Then the next month, you sort of like say, or the next year or so, or period, you're then paying for petrol, fuel costs. It's not coming out of your wages, it's coming out of your trading income. That's really cool. Next thing you're trading for, then you're able to pay for a car. You're able to sort of like run a car every month. You sort of lease car or whatever. You're able to pay for that. Then it's house improvements. Then it's a new home. So it really is a slow building process. And the point with this is that we should always sort of like remember that we are not trying to sell the fake dream that you will be living in a mansion in a year's time. You could be in 10 years, genuinely. You could be in 10 years. You could be in 20, more likely in 20 years, but you could be living there in 10 years' time. But the point is, you're not trying to do it in a year's time. What you're trying to do is always beat the rate to start with. This is a victory. If you beat the rates that your bank or any other asset class, including Bitcoin, including all the cryptocurrencies that pay high yield, if you can beat all of those rates, then you are a trader. You are doing the right thing. You've got to be able to beat you've got to be able to beat 10% a year. That's the first rule of thumb, in my opinion, because you can get 10% a year on some crypto assets. As soon as you're there, then you've made the jump. And that's all you need to do to make this worthwhile. Because why wouldn't you? If you can make, if somebody's saying to you, well, how much you make from trading? I make 12%. It's like, well, that's rubbish. It's like, well, how much are you making from the bank? It's really good. 12% is better than you were doing before you learned to trade. So that's your first point of call.
I look at the percentage, and because my account is small in comparison to others, I don't know. So I said, and Helen said, my wife, she goes, well, how did you make? I said, well, I lost on this bit there, but overall for the year we made 40%.
That's good.
Now 40%, it's a small account though, but it's still 40%.
Exactly.
It's still 40%.
Exactly.
And nobody else has given me 40% on my account. So if
exactly,
mate. In the bank, it wouldn't be
anywhere near that. No crypto asset will pay you that either. And this is the point, isn't it? Is that you've got all these sort of like high yielding assets that if you can make more out of those assets, why would you bother trading, really? So you've got to make sure it's worthwhile. But as soon as you hit 10 to 12%, then it's a worthwhile endeavor, and you should continue to go with it. And eventually, yes, you will get to 40%. I mean, you're 2 years in to get to 40% is fantastic, mate. It's really, really good.
To be fair, if anybody's just joining the show, it's worth coming to the show, even though I've had a holiday, the 2 times a week, because I made the bulk of that money on NASDAQ and S&P.
Yeah.
I followed them and got into fundamentals and things. I started looking at things I thought I'd never look at in my entire life. And you can't time the market, like you said, but the money was there. And then I realized, I thought, it got down, bang, a little bit, came back up, get out, take that money. And okay, so then sit back, go. That's why I've stopped trading for and had a bit of a holiday for 2 years. Go away and think about what just happened.
Yeah. Well, I think it's great that you've done it on effectively 2 trades or certainly 2 instruments, because it's further proof that you are not trying to hit the ball, the leather off the ball in every trade. There's just 1 or 2, every year that just go bang. They're just brilliant. They're just absolutely brilliant trades. And if you can get those 1 or 2, then the rest of it can just float along and do its thing.
Well, it was, I mean, that was the realization when I was walking around. I'm like, okay, so I said to my wife, I said, "Do you think I'm a trader now?" She goes, "Well, you're getting better." She's a bit harsh, but it's now. I've done the 2 years that I thought I needed to prove to myself that I could actually get to grips with it. So
Yeah,
yeah, that's
that's really
my.
good. And yeah, oh no, hold on. Just to make sure this clear. Did you say earlier that you go by your sentiment of a currency rather than the stop loss? No, no. So definitely use stop losses. I'm not advocating that the no use of a stop loss, and particularly when you're starting out, you really do need them. There's no two ways about it. Keep trading with a stop loss. And this is always a bit difficult for me because obviously I'm sharing just everything that I have, and actually sometimes it's counterproductive for you guys. You know, it's not a wise way for you to go forward unless you could literally sit with me 24/7 and see why I'm doing what I'm doing. You know, it's quite involved, my approach. It's not this and this and then bang. There's quite a lot of reading that goes on. There's lots of jiggery pokery that goes on with my trades as well. So my stop loss is a hedge, and then this is why I say stick with a stop loss, because the problem is if you don't use stop losses, you do get run over, and I've been there. You're wrong, and then all of a sudden, your sentiment is wrong, and all of a sudden your account is obliterated. But the way I counter that is with hedging, and until you understand hedging, it's just not wise to come away from stop losses. They're the same thing in a lot of ways. It's just hedging's a lot more involved, and you've got to be really on top of it, and it's not something that I would advocate for people that are trading short periods of time either. I'm able to look at the charts for long periods. So stick with a stop loss, particularly in the ATW account. You're not allowed to trade without a stop loss anyway, but I wouldn't advocate not. And I hear people that don't do it, and I hear people that do it. And from what I've heard, neither is the better way. It's very, very personal. But as I say, unless you could come over my shoulder and see when I hedge and why I hedge and all that sort of thing, then you will be getting yourself into a whole world of complexities and confusion. So stop losses are really necessary. Yes, but your haircut. Oh, but against trade management principle. I see what you're saying. No. I still have a trade management principle. Which is where the hedge comes in. And I have explained it before, but I think it's a bit dangerous for me to go into it because I'm only giving you part of the information, because some stuff I do is quite subconscious, I guess, it's quite intuitive, and it's hard for me to put that down on paper. And that's why I say, unless you be able to literally sit and watch me over my shoulder and see why, then it becomes quite difficult. And I'll sit and wait for the FTSE to do what I need it to do, and eventually it will. And if it doesn't, that's where the hedge comes in. And I've already hedged this position multiple times, and I've changed the position multiple times as well. So I've been able to kind of shift my area up. So I might have taken a short here. The market pops up. I'm going to clear out of that one, but put another one just slightly higher. So there's lots kind of that goes on with the way I do things. But the haircut thing, yes. Now that's the thing. You're two steps forward, one step back. That's okay right now, and you're going to do that. But I like the fact that you said about mistakenly doing what you did with a weekly pivot, because this thing isn't an overnight process. It is a process which takes a little bit of time. John's only two years isn't a great deal. John's 2 years in and he's made 40%. I think that's pretty stellar. And it's I'm not sure.
Well,
What's that?
I've made masses of mistakes.
You've made massive, yeah, and as do I. I continue to make masses of mistakes. But I'm not going to go into the profit, because I sometimes feel like it's a bit. I don't think you guys really need to hear what somebody who's a professional's doing, because ultimately I'm able to do it a lot. So it starts to kind of puts pressure, I think, on you guys when I talk about that too much. So, but yeah, I mean, I make mistakes all the time, but it's just one of those things that, when experience and allows you to be able to correct those a lot quicker. Sometimes you just miss something, but you are progressing. If you are noticing your mistakes, you're progressing, and that's great. And you will get there. You will nail it. You just need a systematic process that you learn really, 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 really well, and then you can start to bend it a little bit. That's the key. And it's no different than your car. Like, let's say, I don't know if you had an old car, and a really old car when you started to drive, that had little quirks that there was nobody else that could get that car started, but you could, because you knew you had to give it like 5 beats on the dashboard before it would turn the key, something like that. So this is the thing, is it's similar to trading. It's like, if you got a process that you learn really, really, really well, it's not, anybody else might not be able to do what you do, but you know it really, really well, and you know that the little nuances and the little tweaks that you need to take to make money. That's really where you're trying to get to, and you only get through that with practice, really. And you must notice with the saxophone, John, I bet there's certain saxes that other people can't get the sound that you get.
I've got one here. I've got one made in West Germany. The company doesn't make it anymore, and everybody thinks, oh, you should get this and get the latest one. No, this is great. And somebody tried to play it, and they thought, I can't play this. I said, well, no, it's not for you. It's for me.
Yeah.
It's taken me a long time to do it. The best thing I can say is I stupidly was ignoring everything I'd done as a musician, how long it took me to get those skills together.
Yes.
I've got a degree in psychology. You wouldn't think so, the way I act sometimes. And that, once I started to realize that actually that is the same as trading. And then also I realized that I can't follow everything.
Yeah.
So, and I've learned to follow the UK 100 through being on the show with you. I follow the NASDAQ, the S&P, and then I have the currencies on a different computer over there. That's on the ATW account. If there's nothing any good, I don't take it.
Yeah.
If I don't like it, I don't take it. I close that, and then on my own account in the afternoon with London, and in the evening, I look for the opportunities on my own account to get a short trade in. And then the position's not big. It's a bit like you, I think, maybe. It's not big, so I don't have to panic if it goes against me.
Yeah.
And I don't have to panic. But it's I'm a seller. I'm selling it. I'm not very good at it going down and then coming in on a buy. I'm not very good at that. I've learned to look at where it is at the top and go look at some things that they're saying.
That's interesting. Yeah.
But okay, so I'm getting used to this, but I need more practice and confidence to put the buy in when I can see that it's like now I'm looking at the sell.
Yeah. No, I like that, mate. Well, but it's good that you have managed to pinpoint your directional bias, because actually, what's interesting about that is that if you look at a tennis player, they tend to have a preferred side. Yeah. You see Roger Federer always kind of skip around his backhand, everything in his power to get around the ball so he could hit it with his stronger stroke. And it's no different to trading. Most people will be stronger on one side or the other, and they're better at spotting downside than they are upside. So actually then you start to gravitate towards trades that are more short than they are long, which is absolutely fine. You're much more likely to be successful that way. But I suppose for everybody in the room, you should all analyze something that you became really proficient in, whatever it is, whether it's I don't know, languages, whether it's some sort of dressmaking, whether it's art, whether it's painting, whether it's drawing, whether it's maths, whether it's English, whatever it is, writing, reading, doesn't matter what it is. If there's something that you feel proficient in, and you will have something, it might be very, very, it might seem insignificant to you, but it's not. It's a skill that you've acquired over the years. Think about how long that took you to really fully get to the point that you were comfortable. I'm not going to say understand it, because we never understand everything, I don't think, but fully get, when was the point that you got so comfortable that you felt you could sit down and do this thing in front of people, if you like, or for hours on end, because you felt really comfortable doing it? And then relate that back to trading, and think why you would expect yourself to nail trading in a short period of time, because it's the same. It's a skill. It's a mindset that you've got to train yourself to do. And when you accept that, you start to enjoy the journey, which I think what happened with you, John. I think you start to enjoy the journey rather than the focusing on the end game. Forget the end game. Right now, forget the fact that you're going to pay for your haircut in 6 weeks, whatever. Just think about the process. How can you enjoy the process and get good at it, and start to think about it in the same way that you have with the other skills? And the way to do that is patience and accepting the stuff you don't know now will fall into place, because it is a discipline, just like everything else. And you just got to give yourself time and cut yourself some slack.
I've got my three things on the wall in front of me, and they're still going well. It's got the market is always there. Don't chase it. And then the next one comes down is time, patience, intelligence, work. I've not always done that one properly. And then the other one, the markets generate information that creates opportunities.
Yes, absolutely right. Absolutely right. And if you don't understand the information, then there's no opportunity. Yeah. So wait until you do. Yeah. Okay, mate, fantastic. Generally, do you advise to do copy trades of mentor and trying to understand the strategy? Oh, that's a great question. Okay, let me just think about this. So would you advise to copy trades of a mentor and trying to understand the strategy techniques being applied? Yes, I would. I just have to think about that for a minute. And I'll tell you why I'm thinking about it, because of two reasons, really. Copying the trades of somebody else. So I'm presuming you mean setting a robot to copy it. Copying a trade of somebody else is fine, as long as you 100% trust them. You've got to trust that they are right. You've got to trust that they're not going to burn your money, and they're not a fraud. And if you can't do that, then that's the first thing. And also, if you end up with a fraud, then you don't learn anything. So as long as you trust them, now that's the first thing. So yes, if it's a mentor, because you would with a driving instructor, for example, you need the mentor. Now I know it's slightly different because the driving instructor is showing you and then you go and do it. But with this thing, I guess it's one of those things. The trader does it and then shows you why they do it, which is great. So yes, and you got to trust them. And then as long as after you've been able to see the trades, that you get a full breakdown of the information, then again, I think it would be a brilliant way to do it, a really, really good way to do it. But difficult to find people like that. One person, I don't know whether they would do it, but one person who I think would be brilliant would be, in fact, two would be brilliant, would be Lenka and Ainsley. And the reason I picked those two out specifically is because I think they would be more comfortable giving you that kind of structure and information. And George, actually, I watched George the other day, and my goodness me, that guy is on top of stuff. He just is brilliant. So I think if you find the right person, I wouldn't put myself forward for anything like that personally, because I don't like having other people's money near my account, because I do things in such a. I like to be creative, and I like everything that I do sort of like with trading is creative. Well, not everything I do with trading is creative, but there's a lot of creativity that goes into, and firstly to then unravel what I've done and try and then explain it to somebody, unless I'm doing it every day, I'd find really tough. And secondly, I don't feel comfortable with people monitoring what I'm doing. You know, I moved away from trading some of the investor accounts because I just didn't feel comfortable. It's just like I found myself making mistakes because I was thinking about other people rather than thinking about my stuff. So with my account, I can do what I want, and I love it. I love being able to sort of like go, you know what, I've got how many trades have I got on right now? 1, 2, 3, 4, 5, 6. You know, I've got 6 trades, and they're all going in the same direction. They're all looking for downside. Now that would make people feel really uncomfortable. Well, you know, if I was if I was trading for somebody, I think that they would be questioning why I've got so many on the market. But nobody can question me apart from me, and I like that. So that's why I wouldn't do it. But I'd say, and so because my approach isn't so, it's more creative than it is. Than it is what's the other side of that, I guess, logic, structured. Thank you, Anne. Yeah, it's more creative than it is structured. I probably wouldn't be the best person anyway, but Ainsley and Lenka, very structured, very disciplined, and George good as well, very structured, very disciplined, and I think that they would have a deeper ability to explain what they're doing and why weeks after the event, you know, when you potentially meet up. You know, I prefer, you know what, I would do it for somebody if they were here every day. That's the one thing that's the one time I would do it, because I could talk to them at the time. You know, I could say, this is why I'm doing what I'm doing, no problem at all. This is why we're going to go and do this. We'll just wait to do it. I wouldn't have a problem with that. But actually sort of like discussing it 2-3 weeks later when I'm moving on to something else, it just wouldn't suit me at all. But everybody is different, you know. Anyway, I hope that helps, Anne. I don't know if it does, but you know, the answer to the question would be yes, but you've got to get the right people. Got to get the right people that suit you as well as a personality. Right, well, let's hope this comes down, John. We got Shell down 2.25% today, which is the first time, and BP down 2.39%, Glencore down 2.5% nearly as well. So we've actually got some genuine downward movement in some of these energy and commodity stocks today, which is the first time I've seen that in a while. I mean, really, some proper Rio Tinto down 1.3%. Some genuine movement in the bearish side of it today. So we may be seeing the start of something. There's been a hint. What's that, buddy?
It looks nice on the 4 hour.
Yeah, I mean, do you know? Yeah, it looks good on the 4 hour. You're absolutely right. It probably looks quite really nice on the 1 hour as well. Yeah, we are definitely seeing a hint of this this changing. I've seen a hint of this changing over the last few days without it following through. But today, as I say, looking under the hood, goodness me, some of these stocks are getting battered. And I think Shell's announcement that they've, you know, got a 4.5 billion bill to pay because of assets in Russia is probably starting to drive it. You also couple that in with the fact that WTI is finally, you know, under the $100 per barrel mark. This is not good for those companies either. I'm not sure how long this lasts. Is the only thing. It looks like it might have broken a level here. Maybe not. That looks like the area to look for the long. I tell you what, I won't be leaving these positions open, John. That's for sure. If as soon as I get my profit, I'm coming out and recalibrating. Because I have considered just letting them run, because I've got, you know, these multiple things and seeing if I can get a decent move, but I still think it's too dangerous. I mean, yes, I think there's recession. Yes, I think the market's coming down. Yes, I think there's going to be problems, but I still think that timing it is not 100% clear yet. So as soon as I get the opportunity, I am closing these FTSE trades and I'm going to start again. But it is looking pretty good right now. This weekly pivot has been the problem. It's been a problem for 1, 2, well, not there actually. All through this 1, 2, 3, 4 or 5 days. If this breaks down, then we got a move. I don't know which way you're going to try and take this, but we're going to potentially, let's see if there's a channel up here somewhere. It's coming down here. That looks like the channel. If that is the channel. Let's just have a look at this. I think the FTSE's got 200 pips to come down, and I'll show you why. Yeah, this is a good area. I quite like this. So somewhere around about, I think it's between 7,350 and 7,400. Now, I've picked out that this is the measured move as well. If it was to break down, you know, the next 4-hour session, that would be the measured move. Brings us down to these lows. Really nice horizontal levels here. But this is the reason I would look sort of somewhere around that area. And where is it? That's the 73.50 area, and I think that's the trend line. I think this touch here, you know, this scrappy price action here, that looks to me like the area it needs to come and retest, and I think it is, you know, potentially off the weekly. This horizontal line there's definitely sort of like something in here. I think this is the box here that the FTSE may well come down and test. Now, as I say, I toyed with leaving these positions open, but what I'm likely to do is take most of them off and maybe leave one. But I'd say this is the area for a bounce. So this would be a good target for downside, which leads us around about another 2% lower, 2 to 3% lower on the FTSE 100s. Maybe today, maybe tomorrow. I'm not sure. Yep. That's the way I'm looking at the FTSE right now.
Yeah, I've got my small position on, so that's.
You got it on.
Yeah.
Good man. Good man. Okay.
My thing was, okay, this is my first day back. Look at something you understand, put a position in that you're comfortable with. Make sure it's at the right area that you're happy with, that you can go and make some food and not worry about what's going on.
Yeah.
And this is for me the right place.
I like it.
Well, it's if it goes against me, I'm not going to get hit because my positions are very, very small. This is the
only area I think is a potential issue, you know, to come back up there. But again, I think that's another shorting opportunity. Personally, goes through there, then, you know, there's a little bit longer to wait. But I still think that the FTSE comes down from here. I mean, it looks good right now. Ends up here on the daily. That's going to suggest lower, and I don't know, maybe down here. I'm not sure where your targets are, but that's the weekly pivot's problematic. It's bounced there too many times. When we get through that, we got some open water.
It's I think my targets and things like that are to do, even though I've had a holiday, I've kept my mind on what's going on. You know, that Brexit and everything else all stocked up, and the fact that they can't get the crops off the ground and things. I'm giving it.
Yeah.
And then I've got friends in the UK that have just gone back and they've said about their heating bills and everything else that's going up. I'm thinking, gosh. So I was quite surprised to see the market had gone up, but I thought, okay, you can use a small percentage of your profit.
Okay, mate. Well, so this is the why I've pointed out Shell and stuff today. Yeah. The reason that this is significant, that Shell and BP specifically are down 2.5%, is that the reason that the FTSE continue to move to the upside is that it's so heavily dependent on the energy sector going up. That while the NASDAQ and the S&P and the DAX and everything else was falling, the FTSE was buoyant because Shell and BP were enjoying the fact that they were going to make a whole bunch of money out of everybody's energy costs going up. Now, today we get the announcement that they're going to get hit by 4.5 billion, and everybody's like, okay, well, maybe these companies aren't so bulletproof. So now they're selling off by 2.5%. The FTSE's now got a green light to go down. It didn't have that before. So that's why it's really significant that Shell and BP are down today.
Yeah.
So your analysis of the energy thing, what you're saying about your buddies and the energy things going where it was going.
Prices were going up, I thought.
Yeah, that's absolutely right. That's absolutely right. But actually, it did actually help the companies in this country out initially. But now we're starting to see a slightly different, a bit of a shift. But I don't know how long that's going to last. You know, it might be that Shell can afford the 4 billion, and it's no big deal there. They've got a market cap of 160 billion near enough. So it's still a bit of a, it's still a bit of a dent in there. Still quite a lot. Anyway, mate, we better bid the guys bon bouche, and thank you very much for joining me today. I really appreciate your participation. You make a very good stand-in for Jeff, and
thank you.
He'll
be back with the quiz next week.
What's that, buddy?
I'll be back with the quiz next week.
Awesome. Yeah. All right, we'll get the full team in next week. Jeff and I'll be back Monday with George for some further analysis. Thank you so much for being involved, guys. Thank you, Anne. Really kind, and thanks for getting involved today as well. Really, really appreciate it, and enjoy the show much more when we can, talk about things that are actually, genuine issues to do with trading. Because you may have asked the question, but there are other people listening that's hopefully would benefit it as well. So keep them coming. Have a great weekend, guys. Stay safe in the market. As the great man always says, bye-bye.